This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Friday morning, last day of the week. Thank God it's Friday. I'm Prashant. With me, my colleagues Nigel and Sonia is back. Sonia, welcome back. How are you feeling?
Thank you. I'm feeling good, and I'm happy to be back, actually. After a couple of sick days, you know, it's always nice to come to the office and see all of you.
Look forward to a good weekend. Look forward to a good weekend and end of earnings season. You know, it's almost just few more days and we're almost done. This has been a difficult one, right?
You know, I don't think the viewers can see Nigel in his entire look, but he's dressed. You know how anchors are generally dressed, right? The top half is completely formal, but the bottom half is fully casual, ready for the weekend, right, Nigel?
Well, I think we should clarify. He's not wearing shorts. That much we should clarify.
They'll never know.
All right, well, let's kick this off. Let's kick this Friday off. We've got markets which are looking better, much better, I must say. And I'll start with, you know, the price action we had yesterday in India. So the Nifty saw, you know, the question is this, right? Is the pullback that we saw, when I say pullback, I mean the correction from the 15th of May to about the 19th of May, is that behind us? I mean, it's a minor pullback. It was not very large, but, you know, from about nearly 18,500, 18,460 or so was the high. The market did pull back to, you know, the low which we saw on the 19th of May, which was 18,060. We saw a bit of an uptrend from there, and then there was another correction, and all of that culminated with what we saw yesterday. And why am I saying this? Because for the second time in a short time span, the Nifty and the Bank Nifty, actually only the Nifty, not the Bank Nifty, have tested the 20-day moving average and then seen a clean, nice bounce. The last test was just last Friday. I mean, when the market actually had a big day, big intraday day, and we bounced 100 points. And then, I mean, over the next couple of days, we had a decent kind of bounce. So this is the question. I mean, if we were in a bit of a consolidatory, corrective, sideways pattern, congestion pattern, is that over with the price action that we've seen yesterday? 20 days, an important sort of, you know, trailing reversal level, short-term reversal level, that has been respected for the second time in short order. Okay, having said that, let me just quickly take you through some of the global cues as well. Overnight, U.S. markets rallied. And S&P was up about not quite 1%, just under that. NASDAQ was up about 1.7%. There is optimism around the U.S. debt deal. It's not done till it's done, remember that. But you had the U.S. President Joe Biden reassuring markets and everyone that, and I quote, the staff is making progress. This is different from what we've been hearing over the last couple of days. To boot, data is strong. You know, just a few days back, we were looking at the initial jobless claims, which were showing weakness. The revised numbers show that, you know, it's pretty consistent with solid jobs growth. And that's the reason why the markets have been consistently pricing out rate cuts, pricing back rate hikes in. Yields are higher. The 10-year is at about 3.8%. The dollar index is past the 104 level. It hit a high of 104.3 something, and then cooled off a little bit. But, I mean, these are dramatically different levels as compared to where we were just about a month ago. For the Nifty, I think the levels don't change. The 20-day will still come into play. That stands at 18,224 now. It's moved up a little bit. And then, I mean, I think if the uptrend, as I've been saying, if the theory is correct that maybe this consolidatory pattern is behind us, these levels should hold. The 20-day and then yesterday's low, which is 18,202. These are supports which you could use for as pivots for trades as well. On the Nifty Bank, the supports come in at 43,546. That's a 20-day on the Bank Nifty. And then yesterday's low comes in at 43,390. And on the Bank Nifty, I mean, the all-time high of 44,151, I think, is the resistance to take out, to cross. It's been dithering. It's been kind of doing everything but take that out for the last many sessions. So that's the resistance on the upside. Sonia.
Absolutely. And I think today, although the SGX Nifty is suggesting a slightly weakish start, the trend has largely been on the upside. And I think the street could latch onto that, perhaps some buy on dips as well. So in the last 1 month, if you just map the trajectory in May so far, the Nifty is up almost about 3% odd. A large part of it, of course, has been done in the last fortnight itself. But the question that we're asking this morning is whether the Nifty can take out that resistance zone of 18,400 to 18,450. That's the big question to ask. Now, the good part is that both foreign and domestic investors have bought in the cash market. So, FI has bought about 600 crores, DI has bought 300 crores. So, that momentum is kicking in. And, even in the global markets, if you look at what happened with the NASDAQ, tech stocks rallied overnight after very good results that came in from NVIDIA. And, of course, the whole semiconductor situation has improved, and hence there was stronger than expected revenue guidance and an earnings beat from NVIDIA, which the street likes. Back home, we are at the fag end of the earnings season, so it's the last leg, so to speak. A lot of, weak numbers coming through, whether it's Z Entertainment, whether it's Page Industries. Both sets of numbers were on the weaker side, and the street would react to that. And a lot of important results to react to today. So there's M&M, BHEL, Samvardhan Motherson, there's Sun Pharma, there's BEML, there's ONGC. And, a couple of these names like Sun Pharma could come out in the afternoon, so the street will react to them in market hours itself. But the SGX Nifty for now is hinting at a muted start. Looks like we could start on the back foot, but this has in general been a buy on dips market. So if the dips get bought, I guess that wouldn't be too surprising today.
Well, that's right, Sonia. Yesterday, a typical expiry played out because still around 245, 250 odd, we were hovering around that 18,250. And once we got past that 18,275, we saw that additional fill-up. Just take a look at that. From bulk of the trading session, we were in that vicinity of around 18,200. So maybe we're returning back X of the expiry day. Now, we've closed in the green in the May series. Last two series have been in the green. The bulls are hoping for a hat-trick this time around in June. Let's see how that plays out. Now, in terms of positioning, the Nifty total open interest, the previous few series at the start of it, it's been around 1 crore. Now, May was relatively light. June is a little bit heavier than May, but it's still not at that 1 crore odd on the Nifty open interest. So we're still in a relatively lighter market. The Nifty has been in a 400-point band for the entire of May. We've been at around that 18,050 odd, all the way to around 18,400. And entire May, we haven't broken that 400-point range. Now, the FIs at the start of the series, they're net long. For the first time since Jan 2023, they are net long. Just pull up the data points. The FI positioning on index futures, this time around, it's close to around 58%. The prior couple of times when they were net long to this extent was December as well as January. Is it such a good thing? Well, in December and January, in fact, the markets ended in the red. So you'd like to have some FI short positionings in the system. In fact, in April, their short positioning was the highest, and we had one of the best series. The Nifty was up close to around 5% odd. So let's see how this one plays out. But otherwise, you will want some short positioning in the system so that you get a bit of a bounce out there. On the option side, the highest open interest is at around 19,200. Maybe some of those call buyers, they are hoping that you get a debt ceiling, that gets raised. You have a dovish Fed, and you maybe get a dovish RBI as well. That's why that's some out-of-the-money call buying that we're seeing out there. On the downside, though, the 18,300 put, that becomes very important because it has the highest open interest on the put side. And yesterday, you saw some writing. 18,200, 18,300 put, both of them did see some writing. While on the upside, the 18,300 call as well did see a fair bit of open interest build up with the premium at around 126 rupees. So just plug in the numbers out there. The 18,300 put, that saw some writing. The rough premium out there was around 80 rupees. So you deduct 80 from around 18,300 and you get, the broad range that you're looking to get in, or the support zone. 18,200, 18,220, it coincides with the 20 DMA. And on the upside, 18,426 becomes important because 18,300 call did see, a fair bit of open interest build up. SGX Nifty is indicating a bit of a pullback. Maybe you get a little bit of a deeper gash. But if you're looking to buy the index, 18,200, 18,220, you'd like to get in closer to those levels and keep a stop loss at around 18,200. Yesterday it worked. Let's see whether or not the bulls can go home on Friday in party mode.
All right. That 20-day has been defended successfully, and will that bring good news as we go forward? That's the question. Well, before we go any further, let me quickly run you through what's lined up in the first 30 minutes of the show. We get you updates from markets across the globe. Gary Schlossberg of Wells Fargo Investment Institute will join in to discuss the global setup. We'll have our research team get you CNBC-TV18's list of top 10 stocks to watch. And Amisha Vora of Prabhudas Lilladhar will join in with some stocks she likes and, of course, comments on the earnings which we've seen overnight as well.
Okay, well, we have some very interesting, macro views coming through on the market this morning. So we'll get straight to that in a bit. First up, we have a view from Santanu Sengupta of Goldman Sachs, who expects a strong trend in services exports and lower merchandise exports to continue. and a boost to net exports in CY23 with real export growth above 4% year-on-year. Most of the capex push in the economy is currently being led by the central government, while private sector investment remains tepid. Goldman Sachs is forecasting a lower investment growth of 7.9% year-on-year in calendar year 23. They are also expecting government expenditure to pick up in Q4 before the general elections in mid-2024. In the backdrop of all this, they expect the Q1 CY23 GDP growth at 4.9%, and for the full year, they are increasing the estimate by 30 basis points to 6.3%.
Okay, well, equity call. Chris Wood of Jefferies writes a greed and fear note. He continues to take the view that it will be only a matter of time before the sensex reaches the 1 lakh level. This target on a 5-year view now assumes trend 15% EPS growth, and that a 5-year average 1-year forward P multiple of 19.8 times is maintained. Now is the time to add exposure to property stocks if it is believed that the end of the Indian monetary tightening cycle is at hand. As for the India long-only portfolio, an investment in Zomato will be introduced with a 4% weighting, while investment in HDFC Life Insurance will be removed. The investment in REC will be increased by 2 percentage points by shaving the investment in ONGC. They've also added Zomato to the global long-only equity portfolio, and this will be paid for, he says, by shaving the investments in JD.com and Alibaba by 2 percentage points each.
That's interesting, right? The chatter is growing now on Zomato, picking up pace, and ONDC doesn't seem to be too much of a threat, at least at the moment.
Yeah, Zomato or Zomato?
We all saw that ad, right? Okay, let's get you some money market views as well. On the rupee, you have Lakshmanan V of Federal Bank, who says that Germany has slipped into technical recession. Euro has plunged to a 2-month low. In the US, stronger than expected GDP data helped the US dollar surge to a 2-month high of 104.2 levels, resulting in the Japanese yen, the Chinese yuan and the Australian dollar trading at 6-month lows. The rupee, however, is well supported around 82.90 levels. He expects the rupee to trade in a range of 82.60 to 83.15 for the next few sessions.
Okay, in bonds, we have Lakshmanan V of Federal Bank, who says that the bond market has been in a tight range of 6.98 to 7.02% despite debt ceiling concerns, which had caused US yields to rise to 3.75%. The domestic bond market has been steady with buying interest emerging above 7%. He expects yields to trade in between 6.95 to 7.05% range before a directional move on either side.
Well, we have a lot of stock-specific action, which we get to in just a bit in our special Top 10 segment. We're looking at Vodafone Idea, eClerk Services, Radico Khaitan, Aster DM, MedPlus Health, and ITD Cementation. Their stocks on the back of positive news flow, while on the flip side, you have ZE, Page, Sale, and Emami. They'll be reacting to negative results overnight.
Okay, we've got Gary Schlossberg, Global Strategist at Wells Fargo Investment Institute, joining in now. Gary, great to have you back on the program. Thank you. Let's start with the contention that the US debt deal will get done. I mean, if you think otherwise, please explain. But let's just, assuming that it gets done, my question is, will that be a trigger for markets to break out, both in the US and, markets like India, which have been waiting just under their all-time highs, but not quite taking it out? What's your sense?
Yes, we think that there will be a brief risk-on rally. If, as we expect and you expect, there is a deal, looks like the deal will be consummated sometime over the weekend. We could see a House vote in one part of the Congress on Tuesday, the Senate following. We do think it'll beat that June 1st deadline. That we think will trigger a brief risk-on trading. As I said, stock markets in the U.S. and overseas will benefit. However, out beyond that, a bit more challenging environment, certainly in the U.S. market. Liquidity will be tightening up. The Treasury technically has to issue a large volume of Treasury bills to rebuild their cash balance. Longer-term spending cuts will take the edge off economic growth a bit. The combination of the two could increase the possibility of that recession that we've been forecasting by the end of the year. And that becomes more of a headwind for the market here and to some extent overseas as well.
Okay. Gary, hi, good morning, and thank you for speaking to CNBC-TV18. We got a report from Jefferies this morning. Chris Wood of Jefferies writes his greed and fear report every week. And this week he mentions that when you look at the Indian market, it's not as expensive as it used to be, both in absolute terms and relative to the region. And there is also now a narrative that earnings growth is catching up with valuation. So in that context, perhaps India looks attractive compared to its peers. Would you agree? And what is your own view on the Indian markets now?
Yes, I would agree. The fundamentals look good. Valuations were an issue at one time. They have, as you mentioned, been coming off. But growth is holding up well. We do expect to see first quarter growth, the estimate picking up speed from the fourth quarter of last year. The fundamentals on growth are holding up well. Inflation is coming off a bit. If there is a caveat out there, it's tightening global liquidity conditions emanating in part from the U.S., but also further credit tightening overseas. And OPEC still could come through with production cuts, which could trigger a rebound in oil prices. But absent that, reasonably good growth by world standards, very good. And inflation does seem to be coming off. The Reserve Bank of India moving to the sidelines to some extent. So numerous tailwinds, a couple of headwinds that we're keeping an eye on. But all in all, on net, India looks like a good play right now.
Oh, that's good, Gary, because of just looking at your view, you're shifting, tilting more towards the DMs in comparison to the EMs, I believe, at current reckoning. Could you tell us what is the preference out there? And also, good to hear that you believe that a deal is going to be done. The debt ceiling gets raised, which triggers a bit of a relief rally. But what about rate hikes? Suddenly an outside chance has come about that we see another rate hike coming in June. Are you in that camp?
Yes, we think that if not June, it's not a done deal. A lot depends on the data. The Fed still may be inclined to pause, just given the very rapid run-up in interest rates over the past 12 or 14 months. But we do think there's a good possibility of at least one more rate hike out there, just given the inflation news we've been getting, the resilience of the economy. If, in fact, the economy begins to lose momentum during the closing months of 2023, we're more inclined toward a Fed pause. Rate cuts really not coming until we're well into 2024.
Rate cuts only in 24, even if you get a pause, right? I mean, in June. So, yeah, hike, no hike, but cuts are still a distance away. Gary, any other sort of themes that you at Wells Fargo, or I mean, themes sometimes work globally, right? Growth, value, anything which you strongly believe in. The team at Wells Fargo strongly believes in is likely to do very well over the next couple of months.
Well, on the equity side, to that first question earlier, we are maintaining a defensive posture for now. Typically, the stock market doesn't bottom out until several months after the Federal Reserve has finished raising interest rates. And we haven't even entered into a recession yet, as best we can tell. So we still maintain that defensive posture, less economically sensitive sectors of the market like healthcare, high quality liquid stocks, the large cap area of the market, more cautious on tech. Keep in mind that has been the main driver of the market. The rest of the market itself has been a bit more fragile. And that raises questions about the longer term outlook for the S&P 500 as well. As we move through that slowdown, though, the market does anticipate. And for that reason, we are keeping a close watch on developed markets overseas and emerging markets for that turn in the economy here and overseas. And that would represent a fundamental shift in policy. But for now, at least, we remain in a defensive mode ahead of what we think will be a recession in the U.S. very late this year or by early 2024.
Just a final question from mine before we let you go. It seems obvious that if the monetary tightening cycle is over and there is a rate cutting cycle that comes through, then a lot of rate sensitives, especially in markets like India, would do well, whether it's banking, autos, or even real estate, which is entering into an upcycle after 10 years of a lull. Is this the way to approach the market, that you continue to stick with the rate sensitives even in a market like India?
Well, I think in India, we do see inflation holding the line, at least for now, and the Reserve Bank moving to the sidelines. So those rate-sensitive sectors do look a bit more attractive. In the U.S. and even more so overseas in Europe, we still think we're on the upside of a rate increase cycle. Close to the end in the U.S., a little more extended in Europe. And for that reason, and given the fundamentals, when we refer to real estate, weak fundamentals in both areas, we'd be more guarded on those rate-sensitive sectors of the economy. We're close to the top, and that could represent a turn later this year. But we think at this point, a little premature, particularly in that real estate sector, which we're very guarded on.
All right, Gary, final question. I'm hoping it doesn't happen. But if we have one more rate hike in store from the Fed, how much do you think equity markets correct? Because I'll tell you what, the commentary for the last 45 days to 60 days, everyone's talking about this pause, and then we don't see any more hikes, and suddenly that's coming back to bite us. So what if we get another rate hike? What happens to global equity markets?
Well, I think there would be some disappointment there, but close on to that, we do think there will be that slowing in the economy, which really represents the driving force. And at that point, rates may move lower in a more guarded outlook for the stock market. Those rate-sensitive sectors may be looking a bit more attractive as it becomes clearer that we are at the top and we're beginning to move lower on interest rates. But it is going to be a difficult period for the market, if not rate increases. A slowing economy, Europe, the Eurozone, already to some is in a technical recession, given those back-to-back declines in GDP. Real GDP, and just a more difficult environment there overseas. So I think that's the bigger issue as we move into the second half of the year. The rate hikes, I think, certainly in the U.S., investors will be looking beyond perhaps one more rate increase. The market is already beginning to price it and beginning to focus on the economy itself, we think, later in the year.
All right, Gary, great to have you with us here.
Thank you.
It's often, as you said, a timing issue, right? I mean, you expect a recession, but, well, the timing of it is so unpredictable, and we've been waiting for it for a while for it to start to show up. Well, nothing yet. And now we're talking about a rate hike. It's June. So interesting, as always, markets. Gary, good to have you with us here again. Thank you.
Thank you very much. Bye-bye.
We'll take a very quick commercial break here. We'll come back, and we have, of course, our research team joining in with the list of top 10 stocks that we will get for you, results, non-results, news, everything coming up.
ये स्नैक्स एंजॉय करने का नया तरीका है, स्मार्ट तरीका है। पर आपको पता है और क्या स्मार्ट है? इन्वेस्टिंग ऑन एंजल वन, जीरो ब्रोकरेज एंड फुल कन्वीनियंस। अब तो मैं सिर्फ फूड शेयर करता हूँ, ब्रोकरेज नहीं।
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.
We don't just make new categories. We remake legends. In fact, we make the whole world of India's mobility new forever.
कैसे करते हैं ट्रेड? Try 5 पैसा. Powerful charts and research tool. One click trade is the new cool. Get access to live market data. Margin funding भी है रे बेटा. 5 पैसा app करो install. Trading made simple, simple for all. With 5 पैसा's wide range of products. यहाँ वहाँ चाहे हो जहाँ. Simply trade on the go. ऐसे करते हैं trade. सोच मत छोटे, install मार. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. Well, as promised, we have our entire research team joining in to help us with CNBC TV18's top 10 list of stocks. And first up on our list is Zee Entertainment. The numbers were on the weaker side. Surbi is here to give us the fine print. Surbi, over to you.
Good morning. So Zee Entertainment reported a revenue growth of 9%, which was ahead of our estimates, but the EBITDA and margins were a big miss. EBITDA was down 70% and the margins came in at 7% versus the CNBC TV18 poll of 10%. The ad revenues was down 10% on a year-on-year basis, and that was kind of on expected lines. The management said that the growth was impacted due to FTA withdrawal and also a slowdown in ad spending. Additionally, higher investments in ZEE5 weighed down on the margins. Now, the bigger overhang for Zee is the completion of the merger with Sony. On the call, management did say that the merger has taken time to receive approvals and they are evaluating all legal options. The next NCLT hearing is on 16th June, so we'll have more updates then.
Thanks a lot for that, Surbi. Well, let's hop across to Rima. She's here to tell us about Vodafone Idea and eClerks. Morning, Rima.
Thanks so much for that. So for Vodafone Idea, it's not bad. On the top line, there is a revenue degrowth. Revenues have fallen by 0.8% on a quarter-on-quarter basis, but margins have improved, 1. And 2, the losses have narrowed, and the losses have narrowed by nearly 1,500 crore rupees on a quarter-on-quarter basis. So there is good cost control, which has helped the margins improving by 60 basis points to 40% this time. The debt has also come down. So the debt on the books now stands at about 2.1 lakh crore. The reason for the sequential drop in debt is, if you remember, the government had converted the accrued interest on their AGR debt, the interest portion, into equity. That was, that straight away reduced their debt by about 16,000 crore rupees. That said, when you look at the other indicators like the ARPUs, the average revenue per user, or the subscribers, now Vodafone Idea continues to bleed subscribers. On a quarter-on-quarter basis, their subscribers have come down by 2.7 million, and even their ARPU, the average revenue per user, has remained flat. Let me quickly talk about eClerx. Well, eClerx, it's a good margin showing. So on the top line, the revenue is absolutely flat, but look at the margins. Margins have actually gone up by nearly 200 basis points to 25.3%. So tepid on the top line, but good margin improvement. Back to you.
All right. We'll keep an eye on those names. Now, the other two names to focus on from the consumer space is Page Industries and Radico. Page is a disappointment once again. Surabhi is here with details. Surabhi, morning.
Page Industries numbers were a big shocker. They saw a revenue decline of 13% on a year-on-year basis, largely led by a volume decline of 15%. The revenues were also impacted due to a weak demand environment and implementation of their auto replenishment system. The gross margins have declined over 200 basis points on a year-on-year basis as they used a part of their high-cost inventory. This also has affected their EBITDA, which was down by 50% on a year-on-year basis, and margins have declined over 1,000 basis points. Now, next on my radar is Radico Khaitan. The numbers were pretty decent. They saw a revenue growth of 2.4%, largely led by volume growth in the prestige and above segment. They saw some compression on the gross margin front due to inflationary pressure on raw materials, but that's understandable. EBITDA was largely flat, and the margins were down 30 basis points. The volumes for popular segment was down 23%. That, along with lower realizations in both premium and popular segments, still remains a concern for them.
All right, Surabhi, thanks a lot for that. Well, let's find out what happened with SAIL this time, Nigel.
Well, Sonia, all this week I've been seeing some metal companies, they come out with good set of numbers and then the stock doesn't react. At least for SAIL, the numbers are weak in itself. And it seems that the shareholders will not like these numbers too much, but the employees would like it. Let's get to the point. Top line, a bit of a miss. EBITDA, a bit of a miss. Margins came in low and profitability as well came in lower. What's the biggest reason for the margin miss? Well, employee cost. That jumped up both on a sequential basis as well as on a year-on-year basis, and that's the reason that they have missed estimates. Keep in mind that realizations are expected to go up. They went up, but maybe not as much as expected. Also, coking coal costs have come down, but maybe they didn't get the full benefit of the lower coking coal cost as well. So that explains why the margins have missed. The only good part is they had promised that there will be some working capital release, and that's happened because you have seen that the finance cost has come in lower if you look at it on a quarter-to-quarter basis, and the borrowings as well have come down by around 3,000 crores. So that's the lone positive. Otherwise, the stock should open up in the red. But Ekta joins us to tell us about some more stocks that she's tracking. Ekta?
Thanks for that. Well, yes, I'll start with the hospital company Aster DM, where the revenue is up 20%, margins have come off, and the profit is down 26% year-on-year. But with regards to the Gulf business restructuring, there are some updates. They are indicating that there could be binding bids likely by Q1 of FY24. So you can probably see that kind of momentum maintained into this today's trading session on account of that. MedPlus, the numbers were better than some brokerage estimates. So revenue was up 30%. Street was anticipating 25% growth, 6.5% margins versus estimates of 6%, and profit of over 25 crores versus estimates of around 15 odd crores. Imami, expect the stock to probably be in the red. Net profit down significantly on a year-on-year basis. Revenue up around 8.8%. EBITDA margins, however, have improved. Domestic revenue growth at 5%, volume growth at 2%. Adjusted for acquisitions, the organic revenue was down 2% year-on-year, and lower AdSense spends have, however, supported the EBITDA. ITD cementation, net profit is higher year-on-year. Revenue is up 40%. EBITDA is up 75%. Margins have improved by around 200 basis points year-on-year. Expect that stock to be in the green.
Okay, well, let's do a quick recap then of our top stocks. Stocks with positive news flow. There's Vodafone Idea, eClerx Services, Aster DM Healthcare, MedPlus Health and ITD Cementation. While stocks with negative news flow, there's Radico Khaitan, Z Entertainment, Page Industries, SAIL and Imami. Let's take a short break. On the other side of the break, Amisha Vora of Prabhudas Leeladhar will be joining in for some fundamental stock analysis. Stay tuned.
Is your strategy ambitious enough to drive transformation at scale? How can you design and deliver a strategy fit for the real world? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Reframe your future with EY.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
मम्मा, और कोई ऑप्शन है क्या?
मम्मा, लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस. इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग. एक्सप्लोर करो ऑप्शन स्टोर. Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
Welcome back. Hope you're having a good morning. It's Friday morning. Hopefully the Friday evening is good. But for starters, Friday morning, you're going to be waking up to a bit of a downtick on the SGX Nifty. Let's see whether or not that gets bought into. But as promised, a lot of stocks to discuss. Amisha Vora, Chairman and Managing Director at Prabhudas Leeladhar, joins us on the show. Hi, Amisha. Good morning. Well, a lot of stocks to track, Amisha, and we're at the fag end of result season. So let's talk about a couple of numbers. Z Enterprises, you all have coverage out there. Did you have a look at the numbers? And what's your view on the stock at around this 180 rupees?
So, of course, numbers are really pathetic. And we understand the growth in the subscriber or ad revenue markets are also slow and is slow for them. But the margins have also taken a big knock. Some of the recent initiatives have been really draining on the numbers. But as we know, that the big trigger for what everyone was watching this is if the Z-Sony consolidates, combines, and then can be a major force to reckon with. I think last 2 years we've been waiting for that to happen. And still again, because of the latest NCLT question being raised, it is in a bit of a limbo. So as what we understand, if the merger goes through, then we feel at 12 times 25, we are still home for a 250 to 280 kind of a range in the stock. We also were thinking through what could be the downside if the merger is not going through. And in our view, it could be in the range of 140, 150. So if you see downside, upside or risk return, we have continued to keep it as a hold stroke buy. And our analyst still is of the view that the merger will go through.
Okay, that's on Z Entertainment. Amisha, hi, good morning, and thanks for joining in. You know, we are at the end of the earnings season, so let me, leave this like a sort of a blank check question to you. What are the companies that you liked? Which are the companies where there is still more earnings and valuation upside now post this season?
So I'll tell you, last year, first and second quarter were completely impacted because of the rise in all kind of material costs, starting from energy, metals, chemicals, so on and so forth. We have started seeing some respite coming into all these commodity costs. So next 2 quarters, we'll start having that pressure from the gross margins going away. Also, we are entering the election year and a lot of spending by states should happen. So, but for El Nino, the weakest point in our economy has been rural spending. And if that gets aided by this election spending and overall buoyancy in the economy, then I think that all the consumer companies are good for next 6 to 12 months, because the prices have corrected, volumes have corrected, margins have corrected, and it has made a very good base. So as what you said, in nutshell, what I felt that the consumer space could be very good, both durable and somewhere non-durable. One of the examples, like Pidilite, as a combination of all the factors I explained, our analyst is expecting 37% CAGR in next 2 years. Of course, this is bluest of quality. But if you go down in the packing order, wherever you land, some of the stocks we are not covering, like Orient Electric, we still feel that the growth could be very good. So this entire space, which is consumer durables, you can say building materials, and to some extent this fast moving consumer also, is a space I think should be doing well.
Amisha, hi, good morning. Prashant here. Do you have coverage on Page Industries, Amisha? Because numbers have come in very disappointing numbers once again. And the stocks, moved up a little bit from about the 35,000 rupee levels, that's come up to 40 plus. And these numbers don't do anything. They bring about a lot of earnings downgrades. I was looking at what Kotak is doing, what others are doing. Everyone is lowering earnings estimates aggressively, some 20-25% downgrades. Any thoughts at all?
No, sorry, we don't actively cover Page Industries, but I know that the numbers have been continuously under pressure, and of course valuations continue to be extremely rich.
Okay, that's the problem, isn't it? Earnings growth is not what it used to be, and valuations are still high, and that should be perhaps one of the stocks to watch out for as we begin today's session, but of course on the downside. Now, Manisha is here because we're going to focus back on what's happening in the commodity space, both metals and oil. Manisha, what's top of mind?
Prashant, thank you for that. I'll start with the crude oil prices, which seem to be, declining furthermore after 4% decline overnight. You're actually getting mixed signals from the international markets, because Saudi Arabia wants short sellers to watch out, and is the reason we saw prices gain up. But yesterday, Russia rules out additional production cuts by OPEC and allies, and is the reason you've seen that premium come off and some more selling continuing into the state today. In any case, across commodities, crude oil was the only one which was holding in the positive, but that seems to be going away right now as well. In the metal space, it anyways has been on a declining spree. You have gold trading at a 2-month lows. We're down by 2% this week. Silver is trading at a 9-week lows. We're down by 4.5% in this week. Copper price is trading at a 7-month lows, and we're down 4% on that in this week. And all the other metals also trading at multi-month lows right now. Markets are looking at the strength in US dollar. Treasury yields on the higher side as well. Economic data not coming so strong. And then all eyes on the US debt ceiling conversation, where the expectation is that we might be looking at some results yielding today or tomorrow.
Okay, thanks a lot for that, Manisha. So let's get back to what's happening with oil, right? Crude oil prices are actually fallen overnight, now below $76 a barrel, as Russia has downplayed additional OPEC plus cuts. So remember, there is a meeting on the 4th of June that will take place, and the expectation was that the OPEC and allies could consider further output cuts at that meeting. But now Russia has downplayed those expectations. Let's find out more. Peter Maguire, who's the CEO of Exim Australia, joins in. Peter, hi, good morning. How do you see all of this play out? And what is your own view on how Brent crude could shape up over the next couple of months?
Well, good morning. I mean, it's been exciting and absolutely, and what Manisha made reference to as far as big sell-offs over the last few days and overnight, certainly. So it's volatile. US dollars back through 104. We can't take our eyes off that one. And the debt ceiling talks, yes, they're progressing, and we've just got to see whether there's a marriage this weekend or it's a delayed sometime into next week. So I think the market's got a level of, I'm not saying fear, but it's realising the situation. And then the other side, of course, Russia's talks to not raise production costs or production cuts. Well, we've just got to wait and see on that too. I'm curious to see how the next week works and what happens in Vienna.
So, which are the metals that you are bullish on now? Which are the metals where you see accelerated sell-off from here on? If you could just, give us your preference list.
Well, I think I'm keeping a very close eye on copper. I mean, we're under 8,000 a metric tonne, so it's at 7,900. I've just got to see some where we see some support. If it's through 7,700, then we'll have a closer look at it. The softness coming out of the Chinese numbers, they're not buoyant. So that's a consideration. The inflation story, what's going on with Fed raising rates, another series of rate hikes. So I think, the metal demand could be softer, and we're just keeping a close eye on where we see value to, jump back in or continue to be short.
All right. Sorry, Peter, just one thing. You did briefly mention China. So there's a lot of talk about China in terms of how the rebound is fading, etc. Do you really think so, or you think, this is also transitory in that sense and things will come back? Or you think this is a sustained slowdown that we will see into the end of the year from China, because they still remain one of the largest net importers of all commodities?
Absolutely. And, so that's exactly right. So, huge importer, because they've got a lot of mouths to feed and a lot of production. But the other side, of course, is you need demand on the outside. And if the demand is waning through higher rates, and so the consumption side through the West and the appetite there, then that's going to be a handbrake for the export-driven economy. And then the other thing that we're very conscious of is those numbers coming out of China. It seems to be, very lackluster, considering the big boom we saw as far as after COVID. Everyone thought it was off to the races, but it's certainly subdued at the moment. So, we're sitting here observing, and I just want to see how they roll over the Northern Hemisphere summer.
All right. Well, we will leave it on that note. Thanks a lot, Peter, for joining in and speaking to us on the way commodities are moving. So very volatile there, the commodities market. But getting back to equities, electric vehicle makers have warned that the abrupt reduction in FAME subsidies will slam the brakes on sales. Speaking to CNBC-TV18, Bajaj Auto's Executive Director Rakesh Sharma said that the industry will not see a breakneck growth without these subsidies. He further added that sales are expected to be sluggish in the near term. Take a look.
Subsidy cuts are between, as experienced by manufacturers, are between 20,000 to 40,000. And that's a significant price rise to sort of pass on to the customer. It's a step in the right direction. It will retard the industry. It will retard it more in the first 2 or 3 months, I suspect. But then it will come back, I think, to a very saner level of growth. I would say you would not see this breakneck growth, but you will see certainly the electric industry growing at a factor, growing at higher than ICE industry. It has been a little bit of an abrupt announcement because it's just about, so there will be a shock in the system for, let's say, 1 or 2 months. But after that, we will see it coming back to a saner level of growth.
Okay, so the electric vehicle space may not grow as fast as what was anticipated earlier because of the low reduction in subsidies. Let's take that discussion forward with Amisha Vora. Amisha, talking about the auto space, the stock that I'm watching today very closely is Mahindra & Mahindra. Comes out with its numbers later in the afternoon and a strong set of numbers expected. The volume growth this time has been almost 22%. Both tractors and autos are firing. Is this a stock that deserves an upside even at these levels?
So Mahindra & Mahindra has put, themselves in a very strong pedal, both with very sharp focus and exiting as they started from little unrelated or smaller businesses. I wouldn't say unrelated, And the slew of product launches and the product pipeline has been fantastic. That coupled with the right pricing points. So I think this stock has corrected a bit from the peak, and it's still a must in the portfolio.
Okay, let's do one thing. Let's take a quick break on that note. But on the other side of the break, of course, we'll have lots of other stock talk coming through. Our technical guests will also join in. And in about 15 minutes from now, we'll get the pre-opening rates going. Anuj will be with us in just a bit as well.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
CNG car, there's no chance of storage.
If you get a CNG car, you've got to get a carrier.
CNG is good, but to get something, you have to give up something.
OMG! It's CNG!
Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से नहीं
आपको
नहीं तो कोई बात नहीं मूर्ति गलतियां होती रहती हैं कोई जरूरत नहीं है चेक करने नहीं मूर्ति
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Okay, welcome back. We got 14 minutes to go for the pre-open session to kick off. SGX is still indicating a 30-40 odd point lower start, but maybe things will improve. We had a second test of the 20-day moving average in 5 sessions, a successful defense. So does this now complete any sort of downtrend, kind of congestion, kind of price action which we've been seeing, and do we start to move up a little bit? Does it add to the confidence? That is the question. Anuj is here in the studios with some thoughts of his own. Anuj, morning.
Morning, Prashant, Nigel, Sonia. You know what? For me, the big cue today is the pre-monsoon rain in Mumbai. In the last 20 years of tracking the market, I've never seen a day in which this first rain in Mumbai and the market's in the red. So I'm going with green today. Just by that, there's some things which don't need logic, and today is one of those days. The close also was very strong yesterday, and as you said, the market defended the 20-day moving average beautifully. In fact, Nifty's low yesterday was just 4 points away from the 20-day simple moving average, and even the 20-day exponential moving average came into play for Bank Nifty. That got defended. Of course, the debt ceiling still remains a bit of an irritant for the market. My sense is once that's over, the market could be preparing for a big rally. Now, May has been a good series. We discussed it yesterday. Just look at how all the indices have fared, except for Bank Nifty, which was marginal underperformer. Everything else rallied between 4 to 7%, and big gains, especially in autos and mid caps and small caps. So for portfolios, this was a good month. As far as Nifty is concerned, again, because you have evidence now, the rising 20-day moving average is your first support, which now comes in at 18,223. And those who track the 20-day exponential moving average is at 18,160. The texture is buy on dips and sell on rally. Both are working, of course. On the Bank Nifty, again, the averages are holding. And those numbers now are 43,546 and 43,363. There's been big build-up at 43,500 put and 44,000 call. So that's where you get the support levels from, 43,450 to around 43,350 thereabout. But, on the Bank Nifty, I want to keep an eye on HDFC Bank. It's one stock which actually has been putting pressure on the market. X of HDFC twins, the market is actually very close to all-time high, especially the Bank Nifty. It's the HDFC Bank stock which needs to be tracked. That's underperforming, of course.
Okay, I don't know about the market, Anuj, but if the showers begin, then of course the scorching heat will end. So I think everybody's mood will pick up.
Absolutely.
Forget about the market, right?
But were you saying that it will rain today, or were you saying that
no.
it has?
It has rained.
Last night,
The suburb side it's been raining since morning.
Wow.
It's not raining in for all you townies, but for those poor people of us who live in suburbs.
Maybe Prashant, it's time for you to move to the suburbs now.
You guys are talking about But rains are welcome, and how, right? I mean, Anuj, thanks very much for that. And they will bring cheer, much respite from the
Suddenly
heat.
Prashant was in minority, huh?
Well, more on this topic a little later. But Mitesh and Srikanth are with us with what they would like to do as far as markets are concerned. Gentlemen, good morning. Good to have both of you here. Mitesh, will it rain for the markets is the question. We've had a nice defense once again like last Friday. The market saw a nice bounce. You've been cautious. You've been slightly on the sidelines, at least at the index level. And your view has been that eventually perhaps we will get to that 18,060 kind of levels, which was the low. Do you still hold that view, or do you think it makes sense to test this market with small positions on the long side? What's your sense?
So Prashant, good morning. One, we have been trading with long bias on the stock side. Though in the index, I think it's slightly a muddled picture. We've been looking at consolidation and trying to figure out the ranges which the market could react to. The upper end is very clearly defined at 18,450. The lower end, my suspect is that in case it's a wider range, it's 18,050-60, and there's a midpoint pivot around 18,250. So broadly, it's a market which is not going higher, not making fresh highs. So trading the index will not be very rewarding, and hence, we have been avoiding the index. Similarly, the bank nifty needs to get past 44,150. So while the indices are slightly consolidating at higher levels, which is not a bad sign eventually in the longer term picture, but in the short term, trading positions will not give you much profits if you're trading the indices. That's why we have shifted to stock for the last 5-6 sessions. But I think eventually we'll break on the upside. The medium-term charts are positive. So wait for this consolidation to play out. The worst case I'm penciling in for Nifty is around 18,050-60. If you get an entry close to that, very good. If not, then maybe we'll see some signs of the intraday indicators cooling off from overbought levels, and then a fresh leg starting on the upside, which should then suggest some kind of a breakout on the Nifty and the Bank Nifty. So for the time being, index is just on the wait and watch kind of a list. But yeah, trading with long bias on stocks.
All right, trading with long bias on stocks. I'll come to stocks in a bit. Let me also get Srikanth Chauhan's view. Srikanth, hi, good morning. Do you think the market has enough ammunition to get out of this trading range? And if not, what should the strategy be for today?
Yeah, good morning, Sonia. Yeah, I think the way the formation is there and the entire setup, I'm going to say Bank Nifty is like underperforming, but it is still above the important levels. Nifty IT index had started recovering from the lower levels, and it is forming some continuation formation. So both these major indices are like very close to their important crucial levels. And base part of yesterday's trading session was that market has defined specific levels for traders. I'm going to say 18,200 is now going to act as a trend decider level for the market. So till these levels are not taken out, we are going to see upward activity in the market. That's the view. For the Bank Nifty also, 43,200 is the level. Below that only we can expect weakness. Otherwise, again, it is going to move upward, and it has completed its corrective pattern. So broadly, we are of the view that again, I think in this series, we are going to see the levels of either 18,500 or 600. For the Bank Nifty, 44,200 is the important level. Above that only we can expect bullishness. But from current levels also, there is scope of 500 to 600 points. So we should be buyer if there is any correction in the market.
Okay, buy if there is any correction in the markets. Good morning, gentlemen. Srikanth, you go first. What are the individual stocks you have for us?
Yeah, Nigel, I would like to go with those stocks which are very close to their long-term breakouts, like DLF, which is currently trading around 475, 480. There, if we see the formation, then after a period of almost 10 years, the stock is crossing its important levels like 475, 450. Based on that, I'm expecting stock to move towards 530 or maybe 600 in the long run. But in the near term, at least 500 is not ruled out. So it's a buy at current levels with a stop loss at 465. And the other stock, which we like, is Tata Motors. And there also we saw a spectacular rally in the previous month. Now it is into corrective mode, but the next level to watch out for would be 550. So here also we have a buy view around 515 with a stop loss at 495.
Right. Mitesh, how about you? You began the conversation by saying that, this is a stock-specific market. Don't worry about the overall levels. So take us through your list.
Yep. So I have more of buy calls today, 3 buys to sell. IDFC Limited, and both IDFC and IDFC First Bank are doing very well. IDFC Limited had a good breakout yesterday after the consolidation. So keep a stop at 92, look for targets of around 100. Jubilant Foods on a mild decline. Let's see if you get a 2-3 point kind of a dip from yesterday's close. Buy around 486, 487. Keep a stop at 477 and a target of 505 can be looked at. And Bajaj Auto made a fresh high after about 6-7 days of consolidation. That should see continuation. That's a buy with a stop below 4600 for targets of 4750. And one sell call, that's on Granules. Keep a stop at 279. Look for declines to about levels of 260.
Mitesh, just a few more names your way since we have you. One is Piramal Pharma, which saw a big move higher yesterday after doing nothing after correcting quite a bit. NCC, if you want to weigh in, 6% day before yesterday, 7% yesterday. So that seems to be catching some momentum. And then these chemicals, the pharma and chemical stocks, JB Chemicals and Sudarshan Chemicals, both these were in action. Sorry, I'm throwing 4 names, Piramal, NCC, JB and Sudarshan. Go on.
So I'll take the chemical space first. Sudarshan Chemical, I think, just came on radar yesterday, that big breakout which has happened. It's gained about 17% for the week, Prashant, but I think it's triggered an uptrend which should see it head towards 490 to begin with. But a more logical target is closer to about 520. So still about 15% kind of a trading upside left over here. Similarly, JB Chemicals and Pharma, I think it gave a pullback to its 200 average, closed below it and then rebounded very strongly. Should see the all-time highs of 2160 being revisited and then possibly even higher levels can be looked at. So very positive in both these stocks. Piramal is something, which I'm not very sure about. It's having a mild uptrend, but the overall indicator strength isn't very positive. But I think even then, the stock has some potential to scale levels of around 790 to about 800 zones, which is only about 4-5% from here. So maybe around those levels, you will see strong selling coming. And NCC, I remember a couple of days back, the stock had gapped down and I was negative on the stock. It's reversed from there. I'm not sure, if I have a correct view on this, but 118, 120 is a pivot. If it starts getting past that, then the recent highs of 126 should be reached.
Just one more name, ITC, Mitesh. Do you have an active call here? I mean, actually, in yesterday's session, ITC and Bharti were the 2 names which really helped things on the upside. ITC.
So yesterday we had a call on Bharti. Today I think ITC was under consideration. It gapped up from yesterday's high and was very strong. Typically, I think unless until the gap is filled, which means that the high of Wednesday, which is around 430, 475, as long as that is not being broken, this gap up should see continuation and 460 could be the next trading target.
Okay, thanks a lot, Mitesh, for that. That's on ITC. Been a terrific performer in the last 12 months. It's moved only one way, and that's upwards, northwards. And the stock is up almost 60%, I think, in the last 12 months. Let's take a short break. On the other side, we'll come back with the pre-opening rates. We will also connect with Arun Sani, who is the Vice Chairman and Managing Director at Triveni Engineering, to discuss their Q4 earnings performance. More on that coming up in a bit.